Hello, YouTube, and welcome back to Generational Growth Investing. We're going to go over updates to the dividend portfolio today, and we hit a new milestone. We broke over $900 for the month of July. Today is August 2nd, and I'm going to be going over all the dividends from the last month, a little bit on the funds, and a little bit about some investing type of concepts. If you're new here, this channel is about going over a dividend portfolio. We're building financial freedom by owning assets that generate consistent and growing cash flow. This is for entertainment purposes, should not be considered financial advice. But overall, we're not chasing quick profits, not trying to predict the market, just acquiring shares that reward reliable cash flow. I wanted to see how a dividend portfolio could work. So I'm trying to just share how a potential dividend portfolio could go, how it's going for me, and I'm liking it so far. Sometimes I get a lot more into the numbers, and sometimes I'm just going to do some updates and just some concepts, maybe to inspire you to think about whether or not this is something you might want to do by going over how it's working for me. So, the current portfolio today, year to date for just this year, dividends is now $4,329. Sort of projecting by the end of the year, it'll be $8,000 for all of 2026, which is pretty good. Last year, so started this dividend portfolio in 2025, where we got $1,548, and I've been putting basically all of my extra income into this, so it's growing fast. It will slow down a bit in the future, but I'm liking how this is going. And again, this could just be part of a larger portfolio. It's not necessarily that a dividend strategy is for everybody at all points in time. Diversification is probably a good idea. And all time, we're approaching almost $6,000 in dividends for all time. This is a little graph of the dividend growth. So on the left, we have 2025. We started in April of 2025, and we're going up and to the right. This is the total by month. So we ended December 2025, that 1500, and we're not done with 2026 yet, but we are growing rapidly up and to the right. And this is also all time starting in 2025. This is per, what you're seeing here is per month. So you can see, for example, like December of 2025, the total for that month was $302, and I've just been growing this rapidly, moving some things around. So, and we're always hitting new milestones. I mean, really rapidly approaching this $1,000 a month, which is pretty cool. So July has ended, and we ended July with $966.60 in dividends, which is pretty cool. I didn't redo the weighted average, but last time I did that, the weighted average of the dividend yields, I have a lot of closed end funds. I'll show you the funds. Is 12.11% annual yield. That is just the dividends and does not include any growth. And we did have a big market pullback recently, but overall things are pretty fine. I did not update this, but this is the dividend yields of the different funds. These are all the funds that are currently in this portfolio. I am looking at some other ones and definitely let you know if I buy more. I did the last video did some rebalancing, but basically we have some funds you may have heard of. We have a couple defensive ones and a couple aggressive ones, such as like CLM and XPay are 20, 19, and 20% annual yield for just the dividends alone. which is pretty cool. But we want to be diversified and we want to balance that with some defensive things. JAAA, JBBB, and clause are very defensive. We'll look at how those did with the recent market pullback. And a lot of these are closed end funds. This is the weighting of all of the funds. I didn't update this either, just because I kind of try to keep this kind of quick and dirty and just like kind of overview. So I update this once in a while. This is pretty up to date. I did buy some Amazon because I do think Amazon is positioned pretty good. So this is just showing the dividend type of funds. The Amazon is not a huge part of the portfolio, but every once in a while I will try to notice if I think there's an opportunity in the market and I might make a pretty small size, call it like a swing trade, and that has usually worked out pretty good. So Amazon, happy with what it's doing right now. Um, Portfolio, I did not update this either, but last time we did the portfolio returns, the total return with dividends so far for the year is 13%, but we still have a lot of dividends to come in, and this was updated the last video, so this is probably more like 14% by now. Although we did have a market pullback, so the interesting thing is going to be the year to date by the very end of the year. But I try not to spend too much time on stuff like this. This is so for July 2026. Like I said, our total is 966. We broke the last month. It was 800 and something, 840 or something. So we broke the $900 barrier, and we're fast approaching the $1,000 a month barrier. I highlighted a couple of the larger dividends: 119, 119 dividend, 152. We have a $59. These are awesome to see these big juicy ones come in. So really happy with how things are going. And what is this? This is 1, 2, 3, 4, 5, 6, 7. So you get 45 separate dividends. But you see, some of these are really small: $2, $1. Just the spread of how things are. Um, Okay, so this is a little bit updated from last time, but this is the price return. This is without dividends calculated in. So this is just how the funds are doing. This is the percentage return without dividends. The way Robinhood calculates things, I've gone over that, but kind of gives a look at how things are going with the different funds. So this is the percent return of these different funds from the last video since I've held them, going back all the way through 2025. But we've had a pretty big pullback. So as of today, JEPQ is, a lot of things are down. JEPQ is down, SPYI is down, QQQI is down a lot. Actually, this should be red, but anyways, going into the negative. JEPI is up, which is interesting. GPIC is way down because it was up all the way to 7.81%, and now it's down to almost just 1%. But so despite this pretty big market pullback that we've had, IWMI is down, CLM is down. These defensive ones, JAAA, JBBB, and clause, this should be green as well because this is actually up. These are doing what I expected, so we have some defensive dividend pairs that basically don't move. Yeah, they're the negative a little bit, but if you track these over time, you can go ahead and look them up, and they basically don't move. I think if I was nearing retirement, because some of these pay, I have it up here, like the annual yield, JAAA, JBBB pays almost 7%. Clause pays almost 7% annual yield. If I was closer to retirement, because they're so stable, it's possible I might just put everything in these, and then I wouldn't even, deal with the market ups and downs. Um, so that's where we're at today, $966, and I am betting that the end of next month we'll break the $1,000 barrier. And I like to bring up the calculator a little bit because what is motivating to me and what might be motivating to some of the people that watch this channel is, I like to take a look and see, you know, projecting out in the future, where is this going to go? Is when can I live off of this and stuff like that? So if I do 966, I can do things like divided by 31 days in a month and see, wow, these dividends are making me $31 a day. If I do 966 divided by 31 days in a month, it's pretty cool now, and even months ago, even when it was making me $10 a day, it's really cool to just know, going through life, especially on the weekends. It's a Saturday or a Sunday, and I'm not at work, but I know that if I average this out, even on a Saturday or Sunday, wow, my dividend account made me $30 today. Like, how cool is that? Um, and I have been investing for quite a number of years, so you shouldn't, if you're wondering, you shouldn't look at the growth of this fund or this portfolio as, wow, how did he come up with all this money right away? This has been over 10 years of investing, and I've moved money into this strategy. It's not, I was able to come up with this with within a year and a half of building a portfolio. So, because I've been very interested in this strategy, I've been moving not only income but also investments that I had. Say, you can imagine I had things just in S&P 500 or something, and I've been also moving things into these dividend pairs, which has accelerated the growth of this. Either way, the payoff is, peace of mind. I really think that the type of investing people need to think about, I think, is, yeah, it might be based on things like age and income, but also personality type. Someone who can handle different types of stress. um, Maybe you're okay holding higher risk types of funds, higher risk types of stocks, um, and your lifestyle or your personality is okay with that. Like, even if day trading is really dangerous, that might be work out okay for people who like to place these trades, maybe these like 2 3 day swing trades, and their personality, like, they still sleep at night when they place that swing trade, right? And then there's going to be other personality types, like I am really liking just, wow, this steady growth and the feeling that every day this should on average be making me about $30 a day right now, and that is that's so much peace of mind. Then I can also do things like, okay, if that's per day, I can do times 7 and say, wow, this is making me $200 a week. $200 a week, that just hits different. The end of the work week, yeah, I'm not spending this money right now, but the mental part of this where, when Friday comes around, I'm thinking, wow, can I go out to eat? Or can, Saturday, uh, you know, should I go to the movies or go to a concert? The knowledge that this is, well, this is making me $200 every Friday. Um, just that's my money working for me. So the mental part of investing is something pretty interested in, and we're going to talk in the last part of this a little bit about behavior stuff. I think uh, a big part of just overall money, man, management, something I learned a long time ago, is yeah, there is a math part of money. It is numbers and all of that, but this is the whole Dave Ramsey thing of, I think he says something like 80% of money management is more of a behavior problem than a math problem. And so I was talking to a friend of mine recently who we were talking a little bit about finances, retirement, stuff like that. And this friend said, "Have you heard of this book called Your Money, Your Life?" And I have not heard of this one. I think it's, so it says, Transforming Your Relationship with Money. So I think, and this friend was telling me a little bit about what the book was about, and I looked up, like, a summary online. I have not read this book, but there was one thing in particular that I thought was pretty interesting with thinking about money, our relationship to money. This also comes from, I saw this TikTok investing thing where someone was doing the whole, like, well, people say that if you buy a coffee or $4 or $5 coffee every day, that's what's holding you back in life. And they were kind of all grumbly about that, and like, that's not what is holding me back, because that's only so much money. And like, that's the trap that we fall in. So I'm going to talk about that in a second. I've not read this book. Have you heard of this book, Your Money, Your Life? When I googled it, it was saying like this was a classic or something. um, Overall, it's saying, a way to think about money, because it's all behavior and how we think about it. So it's saying money is what you trade your time to get, and maybe that's obvious, but not everybody, like, how deeply can we think of like money versus what we trade our time for? um, yes, it's great if we can find a lot of purpose in our job, so that's kind of like the best case scenario. But at the end of the day, you are trading your time also to get, the payout is the money in this world we live in. So like I say, money management framed more as behavior than just a math problem. It's like a mindset thing. Couple other concepts in this book. The book asks you to try to calculate your real hourly your real hourly wage. So sometimes we might say, okay, oh, am I making $25 an hour? Am I making $20 an hour? But we have to calculate our hourly rate again. We have to calculate our hourly wage after taxes, because otherwise we're in imaginary land, right? Because if I'm just looking at my hourly wage pre-tax, that's not what I'm actually living off of. So I like that. Even if people were to ask me what my actual income is, I tend to tell them what the after tax is. I I never understood people, if they do talk about their income, their pre-tax income, because it's not really what I'm living off of. So calculating real hourly wage, when I'm thinking about what I can actually afford, I have to do the after tax. Secondly, um, when it comes to work, uh, calculating in my commute, right? So let's just say I am working 8 hour days. And I don't know, I guess we'll throw some numbers up here. So let's say after taxes, I'm making $120 a day in my 5 day work week after taxes, not before taxes. Well, so I could say divided by 8 hours. So I'm making $15 an hour. But what if I have an hour commute? Well, now I need to do 120. This is after tax income divided by 9 hours. If it's half hour to there, half hour back. Now I'm not making $15 an hour. Sorry about the Here's the calculator. Um, I'm actually making $13.33 an hour if I add in my commute. But if I'm making $120 a day and I am buying lunch 3 days a week, and we all know how expensive like fast food and eating out is these days. So I could say, well, if I wasn't at work, my lunch would cost me, I made lunch at home. I made a sandwich, I cooked, whatever. That might cost me a $6 meal if I was actually at home. But instead, 3 days a week, which I think people do a lot more than this, let's say 3 days a week, I'm at work and I'm instead having a $20 meal. So we'll do 20 minus the $6 we would have spent if we were at home. Oops. 20 minus 6. So that's $14. And then times 3 days a week is $42. Well, we're only doing it 3 days a week, so it's not every day. So we'll just kind of average. The point is, if I'm making $120 a day after taxes, but I'm eating lunch, I'm spending money I wouldn't have spent, so now I need to minus, we'll call it $8 that I would have spent. Now, instead of dividing by 8 hours a day, my like work week, I need to divide by 9 hours to add in my commute. Now we've gone from 13, we went from $15 an hour down to $13 an hour. Once I add lunch, I'm actually making $12 an hour. Let's add the coffee. So 112 was with lunch minus the $4 coffee that we buy. Let's say every once in a while, my day is more than 8 hours because I'm a hard worker, don't you know? And like I put in that little extra time and I work 8.5 hours. We're pushing this number down, and all of a sudden we think we're making $15 an hour. Imagine if my commute is even longer. For a lot of people, that's normal. Like if I have an 8 hour day, so let's do divided by, instead of 8 hours, what if my commute is 40 minutes both ways? Now instead of dividing by my 8 hours, I'm now dividing by like 9.2 hours once I add up all that drive time. Now I'm down to $11. After taxes, I've gone from $15 an hour. Now I'm down to 11. I haven't even added gas into this. Like once I add in gas, so one of the things with this book is real hourly wage is not just what you're getting paid and not what you're getting paid after taxes. You have to include expenses for work itself. And because for most people, they wouldn't be doing the thing that they're spending that time driving back and forth, whatever they're doing, if they weren't going to that job. I mean, yeah, once I add gas into this, we've basically taken $15 an hour, and now it's probably actually $11 an hour. Once we add all the expenses of our day. This is why it's like super important to try to like bring your lunch to work if that's the case or things like that. It just really adds up. So that's like concept one. The other one, so it's kind of like three things I'm going to go over. So that's one. Put numbers here. Two is the cost of purchases converted into time. And this is going to like link up with this thing I'm going to talk about, the coffee that's TikToker that's like, it's not my $4 coffee every day that's holding me back. It's something else. And I do not think that's true. And I'm going to talk about why. The cost of purchases converted into time. So let's say you do these calculations to get your real hourly wage. Let's say you do all this and it's still $15 an hour after taxes. Um, because I mean, we can't get around the after tax thing. That's either way. So let's say I'm really making $15 an hour. Well, what this book asks you to do, and this is going to link up with investing, I promise. What this book asks you to do is when you make decisions on purchasing things, experiences, concert tickets, eating out, um, it's not saying don't ever do anything, but the behavior, the mental change, it's asking you to convert that into your time, which is going to be different for everybody. If I make so, let's just put an example. Um, let's say I'm looking at going to this concert, and the tickets are they're $100 tickets. Um, Pretty easy. If I make $50 an hour as my real wage, can't even say that. Uh, if I make $50 an hour after all those things we talked about, and I'm looking at $100 concert tickets, so what I do is I do divided by my wage, and then I get the hours. So if I choose to spend this $100, I am basically saying, okay, this is worth the 2 hours that I spent at this job that I don't like. Um, or we can look at it like future time at this job. So it's like, okay, if I go to this concert and it's $100, I'm saying if I make $50 an hour, then that's 2 hours next week that I need to sit at my desk or whatever you're doing, um, in order to do this. But the math really changes as soon, depending on my real wage. So if I want to go to this um, concert, it's $100 ticket, and I go and I make $20 an hour, then I can do divided by 20. Now that's 5 hours. So I need to think, do I want to spend half a day at work, 5 hours of work, to have this experience? Now maybe it is worth it because I don't know. I don't know what concert you're going to. But when we start to think about DoorDash, eating out, if I make $20 an hour, um, let's say I mean, I think you get the concept. Let's say eating out is $25 every time I eat out, and I eat out. There's 7 days in a week, and I eat out 5 days. That's $125. And let's see, divided by 20. So I'm spending over half a day at my job to be able to do that eating out. Uh, I think you can see as soon as you start to convert things. Someone was telling me how someone he knows like really likes to go to fancy restaurants. I think that's pretty common, and like maybe you should do that once in a while. But they're like, yeah, I can easily spend like 240 dollars at this restaurant. Well, if they're making $16 an hour, real hourly wage, right? Adding in the commute, adding in what they're spending on gas, everything they're spending for that. Let's say they're making $16 an hour. Wow, all of a sudden, a $240 bill at some restaurant, this is now 15 hours of their life. See where it gets interesting? So, because time is something you can never get back, and the idea with this is money is what you trade your time to get. So, all of a sudden, once again, I'll do this again. We want to eat out. $240 bill for whatever restaurant they're going to, and they like to wine and dine and enjoy themselves. Great. No problem with that. But if you make $16 an hour real wage, so I'm going to divide it by $16, how many hours is that? That's 15 hours of their life. So they're giving up almost 2 whole work days to enjoy that meal. Does that make sense? This is apparently this is a big part of what this book is about. Just tries to put things in perspective. We can do it with everything. Maybe you're thinking about like getting that Xbox or something. I don't know what they cost these days. Let's say your Xbox is $900. Then I do divided by my real wage. Let's say my real wage after taxes, all this stuff, is $20 an hour. This is saying I need to be at work for 45 hours. You know, great if you love going to work, but there might be ways to say, would I rather have my freedom? This is saying that if I make $20 an hour, that $900 Xbox is an entire week at work. And is that worth it? Now, we're talking about $900. Well, because this whole channel is kind of about investing, well, we can also do something else where we say, and look, I don't think life is about just doing nothing and being like super frugal, do nothing, right? But we need to ask ourselves, what if that $900 was compounded? So let's do a little bit with that. I'm going to do a couple examples and then last talk about the coffee. I do more energy drinks, so what is that $4 coffee like really costing me? So, but we'll stick with the $900 Xbox. This would be a one-time purchase. So let's go over to our compound interest calculator. And with this one, what we can do, I gotta move the screen a little bit. Okay, let me move this over. With this one, what we can do is we can say, okay, our initial investment, $900 Xbox. 0 monthly contribution, because it's just a one-time thing. Length in time in years. Let's do 10 years. Our estimated interest rate is 12%. You can tell me, you can argue that that's too high. I don't know, do 11. Do this yourself if you want. We'll do 11. Make the people happy. Estimated interest rate. And I'm only doing 10 years. I'm not even doing 20 years. Monthly compound, calculate. So this is saying if instead that $900 for 10 years at 11%, this is $2,690. Okay. Well, looks like we have to recalculate with this then. 2,000, say 900? 2,650, right? Okay, whatever. Okay, $900 Xbox where I could have put it in the market for 10 years. This is saying it would be worth this much. Well, what if we redo the calculation? Now, I do divided by my hourly wage, current hourly wage, $20 an hour. That's 132 hours. So how many days is that? Divided by 8 hours a week. So that's 16 days of my life. I'd love to take a 16-day vacation. I don't know about you. Like, not even talking about a week vacation. We're talking about a 2 week, 14 days is 2 weeks, 16-day vacation. So, according to this whole your time versus money thing, this $900 Xbox is actually costing you 16 days of your life. Um, that's only 10 years. What if you're young and you invest it, again, not adding any more, just $900 Xbox, estimated interest rate. What if we do 20 years? 20 years is $8,000. So 8,000 divided by my hourly wage is $20 an hour. 400 hours divided by 8, 50 days. So now we're in the double digits. If I instead invested that $800, I mean, I'm going to make more money. I want the Xbox. Like, what if every time I choose to spend something, I say I have to equivalently invest the difference? If I want a $200 concert ticket, I have to save up $400. I can still go to the concert, but I'm going to also put the equivalent amount in some investment for my future. This is saying in a 20-year time period, that $900 Xbox is actually 50 days of my life. What's 50 over 365? 13% of the year. If we do 30 years, $24,000. And I think it should be more because I usually go off of 12%, but 11%. So now, I lost my calculator. So now, 24,000. So all we're doing is we're saying if the $900 Xbox I invest for 30 years, I get $24,000 divided by my hourly wage. That's 1,200 days. What did we do before? We do 1,200 divided by 365 days in a year. This is where it gets really interesting. If we invested the $900 Xbox, the $900, instead we invested it for 30 years, it would be worth $24,000. And that might seem like, well, what's the big deal? This is where the TikTokers like, well, my $4 coffee isn't what's changing my life. Because if I invest, if I don't buy that Xbox, it's only going to be $24,000 in 30 years. How's that going to change my life? I can't buy anything. What can I buy for $24,000? Realistically, I barely buy a used car, maybe you feel like. But once I convert that back into time, that's 3.2 years of your life. And I'm not saying you can't buy the Xbox. I'm saying once you do what this says, money is what you trade your time to get. Therefore, when you just give away money, when you buy stuff, what are you doing in exchange? You're giving away future time. So, because of the power of compounding and compound investing, a $900 Xbox, if you were to invest that, that's 3.2 years of freedom. Later in life. Yeah, this is later in life. If you're 20 years old, you'll be 50. But That's 3.2 years you're giving up. And the idea is, I believe from this book, is just be aware of what you're giving up. So hopefully you get that. Last, I'm going to put this in the coffee calculation or energy drink. And Monster energy drinks are $4 now, which is. Anyways, let's just go with the $4 coffee. Let's assume this is every day. Let's assume you don't do it on weekends, but I think that's a little crazy because I think you do on weekends too. But so here we go. $4 times 5 days in a week times 52 weeks in a year. Again, I mean, maybe I can find those TikToks where people are like, it's not the coffee that's making me broke. Like, again, $4 coffee. Watch the calculator. $4 coffee times 5 days in a week times 52 weeks in a year. So we're at 1 year. In 1 year, you spent $1,000. And you might be saying, well, how's that going to change my life? $1,000? I mean, what can I really do with that? I can't buy a car. That's only like 2-3 months of car insurance. This isn't changing my life, this $4 coffee. Well, I don't know what your wage is, but so we'll just call it $1,040. If I'm making $20 an hour after taxes, after the commute, after the gas, after lunch, and I do divided by $20 an hour, that's 52 hours. So that $4 coffee is, I'm trading a week of my life for the $4 coffee every day, which is fine. Do what you want. But what happens when we add in compounding? $1,040, it's $86 a month. So $1,040. So we go back here. Initial investment, 0. Monthly contribution, $86 a month. Let's do 20 years. I think we can get 12% interest rate, but we'll keep it at 11. Calculate. $4 coffee every day, not counting weekends. Not counting weekends. In 20 years, not even 30. Don't worry, we'll do 30 next. We'll do 30. In 20 years, instead, you would have $74,000. Well, that's pretty good. Maybe you still feel like, well, I can't retire on that, or I can't buy a house with that. Well, with dividend investing, could be some income. You're right. Maybe you can't buy a house with this, although you could convert this into rent or a mortgage using dividend investing. But what is the real cost of the coffee? One way to think of it is, well, $4 coffee every day, not counting weekends, is $74,000. After only 20 years, we'll do the 30 years. But what if we do the time for money conversion? $74,000 divided by what's your hourly wage? After taxes, after commute, after these expenses like gas. What's your real hourly wage? In this example, let's say it's $25 an hour after taxes, after commute, after all that. $2,690 hours. That's what it's costing you. How do we get from hours to hours to days? We need to divide by 24. 123 days? That doesn't seem right. Did I do something wrong? 74,000 divided by $25 an hour should be 2,096. That's how many hours? Yeah, okay, divided by 24. 123 days of your life for the $4 coffee. What if we do 74,000? Yeah, that can't be right because you're not making $74,000 in 123 days. Well, we know it's. See, okay, what did I do wrong? $74,000 divided by my hourly wage. Let's go back to $20 an hour. It should be years. I don't know what I'm doing wrong. Let's do $20 an hour times 8 hours times 52 weeks in a year. Oh, times 5. Yeah, that's more like it. 74 divided by 41. Sorry about this. Should be. I don't know why that. What did I do wrong? Should be 1.8 years. Really, the $4 coffee, not counting weekends, should be 1.8 years of your life. Let's do this in 30 years. Again, I'm not doing big initial investment. The monthly contribution is the $4 coffee. Calculate. 241,000. 241 divided by $25 an hour. 9,640 hours. I'm looking something up. Yeah, this should still be over a year of your life, but I did something wrong. Well, I don't know. I know I was doing it right before. I'm doing something wrong with the conversion. Uh, but this part is right. uh, how? Well, we can still think of it this way. The $4 coffee every day after 30 years is like $250,000. I mean, the easy way to do this is to say, well, okay, $250,000. What do you really make? It's your salary, your yearly salary, after taxes, after expenses. Because all these people use pre-tax salary, and I think it's crap. Let's say after taxes, after expenses, you're making $50,000 a year. So let's divide by 50,000. That should be 5 years. I don't know what's going on with this. $250,000 should be 5 years of working. That is, like, according to this, that is the real calculation. That's what you're giving up. Yes, you don't see it until later. And can you drink coffee? Sure. But this whole thing is really to help you think about, what am I actually giving up? What I would like to see is, you know, okay, $4 coffee, not including weekends. I want to say every time I buy a $4 coffee, I also invest $4. So it's equivalent. I want to buy my $4 coffee. Every time I do, also invest $4. If I do that, I'm going to be a lot better off, because what that means, if we go back to here, this is saying, if what's the $4 coffee worth? The idea was like, well, $4 coffee every day is only $1,000 a year, but it's actually not. Um, Once you take it and you compound it over 30 years, um, it's not $30,000, it's $250,000. So imagine if every single day, instead of buying a $4 coffee, I still get the coffee, but I also put $4 in some investment account. I also bought XPay, or I split it up. Oops, oh, you guys can't see that. I split it up amongst Jeppy and GPIC and XPay, and I split it among these, and I tried to shoot for, 13% return per year, something like that. It's only $4, and it's only $86 a month. A month. Because if sometimes I do these calculations and I wonder what people like are thinking. Like, I do this compound interest calculator, and I'm like, okay, well, what's your initial investment? Okay, let's start with $1,000. And then I think, well, what's my monthly contribution? I mean, I don't know what it is for you. Can you contribute $500 a month for 30 years? 1.4 million dollars. $500 a month. Is that is that giving up eating out sometimes? Not every month, but sometimes. Is that giving up the coffee? If I do $86 a month, you can look at it like, every time I buy a coffee, I also invest $4 every time. $4 coffee, okay, I also invest $4. I mean, that at least puts me at $86 a month in investing. If I double it, what, 190 a month? If I double it, $190 a month for 30 years at 11%. I mean, wait till I put in 13%. I mean, $500,000, which in dividends should be $50,000 a year to live off of. Like, I just think, you have to live your life, but it just puts in perspective. It's so easy to, every Friday or Saturday night, spend $100 on at Olive Garden or something. Say, eating out. per week even. I mean, this is normal. If I invest the equivalent, now I'm at $400 a week. What do we do here? 190. If I do $400 a week and I put in 12% interest rate, which I think is fine, $400 a week, which is the same as eating out every week. And I'm not saying you can't eat out every week. I'm saying this is what you're giving up. And like $1.3 million is going to be years of your life. I'm saying, what if instead of spending $100 at a restaurant every weekend, you only did it once a month instead of every single weekend? In my estimation, that's what you're giving up is $1.3 million. And once I add the coffees, so $486 a month, $1.6 million. Because if I do 486, if I do $486 and I do times 12 months. Okay, so I'm spending $5,800 a year. And the TikTok people that say, "Oh, well, the reason you're broke isn't because of eating out and all of this." Cuz what are you really going to do with $5,000? If you bought a used car that was worth $5,000, it might get you from point A to point B, but you'd be worrying about it breaking down all the time. But I've done it and it can be done. But you're looking like this isn't going to buy me a house. This is like 3 months rent at best. So what's the point? Well, the point is if you take the money instead and invest it, you have $1.6 million. What if we only do 10 years? What if you're like, okay, well, this stinks, but I'm going to do it for 10 years. Now you've got $100,000 that you're working with. And then maybe you can stop because once you get to $100,000, this is going to grow on its own by $1,000 a month. So, sorry for the rant, but I wish more people understood, what they're investing isn't just about, oh, I want to retire, or it's not just about, oh, I want to get rich because I want to have $1 million one day. It's about what are you giving up in your future self? Apparently, a $4 coffee, you're either giving up $200,000 or you can look at it as you're giving up years of your life once you convert it back into the hours you're spending at work. And I don't think people should be, go crazy like thinking about every single transaction like this, but this is the reason to come up with a plan. Because if you want to be doing this one day and this was a projection we did before, 30-year, $500 a month for 30 years at 12% is $2 million. And it's not just about that $2 million. It's $4 coffee doesn't cost you. You might not think, oh, this costs me $1,000 a year. You could think, this actually costs me $2 million if I do it every day and I don't invest. And I would just like people to at least be able to see what the long term effects of these things are. So, not every video is going to be like all about this stuff, but maybe this information will be helpful to you or somebody that you know. Um, and look, the next video, I probably won't go in depth on something like this again. Um, but hey, I'm at 966 a month in basically passive income, and this is just going straight back in to the snowball, and the snowball is gonna keep snowballing.